What's up, guys? Welcome back to my channel.
Earn it, save it, invest it.
In this video, I'm going to quickly show you why Palantir is going to drop significantly in stock price, and there's really an easy way to figure it out. Let me show you. All right, so I'm on this website, stockanalysis.com. It's going to show us all the stock or all the publicly traded companies listed by market cap. Now we have the Mag 7, of course, Apple, Nvidia, Microsoft, Amazon, Google, Meta, Tesla at the top, Berkshire Hathaway, Broadcom. It keeps going down and down and down. Palantir, since its run up, has made it to number 38. Number 38. Now, that is out of 5,468 companies. Now, you can see the market cap, the stock price, how much it changed, but I really want you to take a look at the revenue. Look at Apple, 395, Nvidia, 113, Microsoft, 261, Amazon, 637, Alphabet, 350, 164 for Meta, 97 for Tesla. You can see it's, we have 50 and up, we have in the hundreds, right? Depends on your margin. Obviously, Nvidia has great margin, they have great growth rates, so that's why they're high up there. But let's just keep going down, right? You have all of these, right? We have 39, 400 billion, 84, 88, 154, 40, 56, right? Now we're getting close to Palantir. Now, if you were to be blindly looking at all of these, there would be one, and in fact, I'll just go down to it. There's no reason to have any suspense. Let's go to Palantir. 2.87 billion dollars of revenue. It's not 28.7, that's not 287 billion, it's 2.87 billion. Look at every other company right above it. Look at how much revenue they bring in. 10, 20, 40, 50, 60 times, 70 times as much. You to get anywhere lower than 2.87 billion in revenue, you have to go all the way down, and I just did this, to 264. The 264th most valuable company on the stock market has $1.67 billion in revenue. 264. And look above it. You have 22, 25, 143. I mean, you have 4, 3, but when you go through it, I mean, you're starting to play with top dogs. And granted, their growth rates are high, their margins are well, but to be in this circle of companies with the revenue that they're making, I just don't see it. Now, obviously, you have here number 49, Intuitive Surgical. It's the only single digit you have of revenue up until ARM 77. I mean, there's plenty of other things about Palantir that we can go over. But just looking at that in itself makes me think, why should it even go up? There's no reason for Palantir to go up if it is valued in that circle. I mean, it just seems like it has to go down, right? I mean, again, 39 Palantir, right? 2.87. The market cap is $238 billion, right? If we go down to the 264, where that company is making about the same, less. This is the first company that makes less revenue than Palantir. They're in a $52 billion valuation. 52 billion valuation compared to, was it 240? I mean, that's over 4 times as much. It just seems so overpriced. I have shares. I bought a total of 150 shares um, over a few buys a year and a half, almost 2 years ago. And I kind of sold some off here and there, sold some off for a really ridiculously cheap price. And then I sold some off as it was going up and up. I have not sold any as of late in the last month or so, but I think that's going to change. I'm going to put up an order, I think, next week to sell the remaining. I only have 25 left, but at the $100 price that it's at right now, that's, um, for the shares that I have left remaining, the 25, my cost basis was only, I think, 300, $400. So really, I'm gaining about $2,000 on it. I've already cashed out all my profits, but I do believe I can put that money towards something else um, that has a higher return, higher growth, in the future. Palantir, like I said, looking at the 2.87 billion mixed in with all these other companies that just they make significantly more revenue. Now, like I said, there's margins, there's growth rates, there's the future, what some company might be able to do, but it just seems overvalued. Now, again, this is my opinion. Just because something is overvalued does not mean that it actually has to go down in stock price. It doesn't. The valuation in itself usually doesn't. It doesn't mean that it has to go down. Usually, it's something fundamentally wrong with the business has to go down, or it just has to be. I mean, it was at extreme levels at 120. I still think it is at pretty extreme levels at 100, but it's dropped a little bit now. There's nothing to say that it can't stay at 100, and that's where it's found its support. There's nothing to say that 80 or 60 is a support. But like I said, just looking at the stock market, right, as a whole, you're looking at the revenue, you're looking at the market cap. There is no one close, even remotely close to them, that's making that little bit of revenue. So that's my quick take on Palantir. Like I said, I own 25 shares. I think I'm going to cash out of those and start putting into a few other things that I have my eyes on. So, yeah, that's the video about Palantir. Hope you enjoyed it. Give it a like and subscribe. Helps a lot. And don't forget to
Earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.